If you've been paying attention, you don't need this wake up call. If you haven't been paying attention, it's time to wake up. Keep in mind, I think I read last week, the Fed has 400 PhD economists on staff. But every time they get up on stage and speak, it seems like no one's seen this coming. Yet, I've been watching YouTube channels, even on my own channel, for a year, talking about this is coming, and we're not economists. You pump in trillions of dollars into the system, and then you stop pumping the money in. What do you think's going to happen? I don't. We created an asset class bubble across the board for every asset class. And then when you stop pumping the money in, it all implodes on itself. The problem is we were printing money, over consuming, and people weren't working, so that causes a demand issue because we're not making enough stuff. And then, yeah, are you surprised right now that the government once again has screwed this up? They got COVID wrong, they got this wrong, they got 2008 wrong. You can't ever trust the government to get anything right other than blow money. Keep in mind the PhDs, remember like 2008 where up until the crash they were talking about how strong the economy was, the analysts, the PhD, the economists, the government, and then boom, 30 days later, look how fast it imploded. Does it feel like what's going on right now, for example? So once again, they got 400 PhDs, but no one saw this inflation coming. Janet Yellen's up on stage, didn't see this coming, and all they can really get out of their mouth is blaming Putin, even though gas prices were going up the year before Putin invaded. So, I don't know. People not working is part of the issue. China shutting down is the issue. Overconsumption was the issue. Giving away trillions and trillions of dollars could have been something wrong with that. I don't know. Right now, I got no faith in the system. They do the 75 basis points today. Markets rally, but why? What is the rally about right now? They're talking about unemployment going up to 4.1%, I think he said today during his speech. That's the prediction for 2023. So we know that there is going to be layoffs coming. So they got to see a recession coming if they're quoting that kind of pullback. So we might even be in a technical recession right now. We know there's going to be some kind of slowdown in the next 12 months. The housing market's coming down to a crawl. He had interest rates sitting at 6.25% this morning, a couple more raises. You're going to have 7% mortgages. So that house you thought was going to cost you $2,000 is now going to cost you $3,000. Good luck with that. So we're going to stop selling homes. Realtors are going to stop collecting commissions. People are going to stop making money on their homes. The whole, the mortgage industry is going to slow down. The home refinance market's dead now. All this leads to layoffs and less money, and we know that's what's going to help trigger a recession. Where do you get excited right now? Yeah, the market popped, but you see layoffs coming. You see unemployment going up. You see a slowdown coming. There's nothing to get excited about right now. And that's why why are these analysts so quick on turn on Bloomberg or flip through anything on YouTube, jump on CNBC. I spent 4 hours in the car today driving up from the Upper Peninsula back down to home. It's 59 degrees when I left. It was 100 degrees when I got home. Listen to CNBC on XM radio on the drive. And so many analysts they're so much in a hurry to call the bottom. This is the bottom. There's good deals. There's good deals. There's good deals. I'm like, this party is just getting started. There's no way that I'm looking to jump in right now unless I plan on holding for a long time. What if I wait 12 months? Right? And I'm not giving financial advice. It's not what I do. I'm thinking for myself here. What's the most upside I could lose in a year when there's no bright side? Might lose 5, 7, 8%, but I might risk 20, 30%. Nah, I think I'm good. Why are we so worried about calling a bottom right now when we know the recession's coming, it sounds like? They're saying unemployment's going to go up. There's all these other things, more interest rate raises, more supply chain issues. Why are we calling bottom now? This thing's just getting started. So, anyways, they said they weren't going to do 75 basis points. Well, here they go. So I think they lost some credibility there. Janet Yellen saying they got this wrong. Blame Putin, blame Putin, blame Putin. When it couldn't have been the 5, 6, 7, 8, 9, $10 trillion we pumped in the system and the Fed unemployment and all these other gigantic chunks of money we pumped into the system, and people said, screw it, I'm not even going to work. Oh, remember when people weren't paying their rent and their mortgages, even though they had jobs, and they were taking that money and pouring that into the economy? And there's so many things. We've not been paying school loans. Instead of paying on school loans, that money goes back in the economy, causing more inflation. Why is it that I seen this coming, but, Janet Yellen and the 400 PhD economists, at the Fed didn't see this coming? I say buckle up and don't be fooled by these rallies, because it seems like it's just mini dead cat bounces over and over and over again, or a bear bounce. Because this party's just getting started. We're going to have more layoffs. We're going to watch as interest rates rise. It's going to collapse real estate. The home builders are going to take a beating. Mortgage companies are going to take a beating. All around, everyone's going to take a beating. You think the stock market's going to rally from there? Come on, dude. Bitcoin, I'll do another episode on that, but I made an episode that Bitcoin could go down to 10,000 or less, and people were calling me crazy. Well, here we are at 21. It keeps going down. Look, people weren't paying their school loans. That money's going into Bitcoin. They weren't paying their rent. That money was going into Bitcoin. They were getting fat unemployment, 2 or 3 times what they used to make. That was going into Bitcoin, trying to get rich. That's all gone now. And now it's like, well, now with inflation and gas prices, I can't gamble on meme stocks and cryptos. I got to pay my rent. I can't defer rent anymore. My car payment's due, and the food's expensive. Well, guess what you do? You fire sale. You start selling your assets to pay for your life. Because people will, here's one thing I learned in the last 20 years. People will sell almost everything they have to support themselves rather than go back to work. Many people live that way. So people are going to liquidate their equities. They're going to liquidate, out of the Robinhood accounts. They're going to liquidate their cryptos and their NFTs and try to go as long as they can, hoping that they get some more free money from the government. And when they don't, they'll go back to work. So you're going to watch cryptos collapse. Who was the guy this morning? Michael Saylor. I might have his name wrong. Caught his interview on CNBC, and he was talking about how, then CNBC, the anchor asked him, Bitcoin's never had to thrive at a time when interest rates are going up. And he said, well, that's not a big deal. It's not going to affect it, blah, blah, blah. And at the same time, he also says, I think he borrowed like $2 billion or something, and I'm ad-libbing here, at like 1.8%, and that allowed them to buy more Bitcoin. It's like, well, you said the low rates allowed you to borrow more money to buy more Bitcoin, but you're also saying that the higher rates won't affect buying Bitcoin. That makes no sense. Of course it's gonna. If rates go up that much, now it doesn't make as much sense to go buy Bitcoin. So you're watching these things collapse, probably back around to where they were before COVID hit. The problem is they're going to go back to where it was before COVID hit, before the money got pumped in the system. Because the Fed's got to collapse this thing to control inflation at this point. The problem is it's going to get back to that point, and then we're also going to have a recession / potential collapse. So it's going to be less than what it was in like January of 2020, December 2019. So I started looking at the numbers. I'm like, man, the S&P and the Dow, NASDAQ might go down a lot more than people think if we don't hold this thing together. And I feel like we're more worried about calling the bottom so we can quote unquote be right than sit back and say, man, the next 18 months looks like hell. Why are we worrying about calling bottom right now? Like, no one's seen this coming, they said. Well, if you didn't see this coming, how can you call the bottom? If you didn't see inflation coming, how can you predict what's going to happen next month? This gets to the point where listen to everyone that told you to buy the dip on Bitcoin from 60 all the way down to 20. Listen to everyone that called the bottom in the last 8 weeks and you kept buying when it wasn't the bottom. And then wait a year to see how it plays out, and then never listen to those people again, because you'll go broke listening to these people that think they have it all figured out, because 400 economists and Janet Yellen didn't see this crap coming, but some guy on TikTok with a 15-second video about equities and trading options, it's going to give you the legit advice. I don't think so. Anyways, it's my rant of the day. I'll catch you in the next one.